Whether you're a general contractor working on a construction project or the project owner itself, your building is exposed to certain risks during the course of construction. Whether it be the increase of wind while your building is structurally incomplete, or the theft of building materials while the project is unintended. There is a specialized policy to cover these unique exposures called a builder's risk insurance policy. This policy can cover a wide array of things, but the primary coverages are buildings or structures under construction, the materials and supplies, whether it be at your job site or in a temporary storage location. It covers the property in transit, maybe as the suppliers come in and out, or the contractors have it at their warehouse or they're delivering it to the job site. It covers the debris removal if you were to have a claim and contractors had to come in and clean up the project site. It covers things such as soft costs, which are architectural fees, increased real estate fees, or maybe insurance premiums associated with the extension of your project because it's not done, or the redoing of the plans. And finally, business income and rental value. If your property was going to generate you an income, or maybe you're going to put tenants in the property that were going to pay you rent, having the delay of the project due to a wind claim would cause you to lose money, and this policy would cover your net income while the building was getting rebuilt and off schedule. It is important to note that builder's risk is one of the most non-standardized policies in the insurance industry, and it's important to read the policy thoroughly because you'll never get an apples to apples quote between two different insurance carriers because chances are they create their own coverages and their own coverage wordings. So here's our 4 tips to make sure that you're getting the best deal on your builder's risk quote or your builder's risk program for the year. Our first tip is to make sure the policy covers both the existing structure and the newly renovated portions of the construction project. Oftentimes, general contractors want to add the contract price as the limit of insurance on these builder's risk policies, but not all the times does this encompass the full risk of the project. It might leave the existing building or the part of the building that you're adding onto or renovating uncovered during the course of the construction project, especially if it's not covered elsewhere. Our second is to read the coverage extensions before you purchase additional coverage. Chances are, if you need additional coverages, you might have it somewhere on the coverage extension page. An example of this might be you have extensive landscaping costs. Instead of first adding those landscaping costs into your limit of insurance under the landscaping portion, check the coverage extensions to make sure that you already don't have a limit, and if you do have a limit, make sure it's adequate and that you don't need to add more onto it. This should save you money in the long run. Our third is to look into adding testing coverage. This one is really important because during the course of construction, you'll have contractors like a plumber that you pay them to renovate your entire building with new plumbing. The first thing that they do when they're done is they're going to turn the water on and test whether the plumbing works. If during that test it causes water damage to the rest of the property, that wouldn't be a covered cause of loss under the traditional builder's risk property. You would have to file a lawsuit against that contractor to get your money back, and this can take years to fully get your money back. Where if you add the testing endorsement for just a little bit of premium, the property policy would go ahead and take care of that, and then you can go on with your construction project. And finally, our 4th tip is to make sure you report your construction values accurately. There is a 100% coinsurance clause included on the majority of builders' risk policies. And this means that there's no margin of error when accounting for your construction costs and the limit of insurance on your builder's risk insurance policy. Meaning that the amount that you're underinsured during the time of loss turns into the percentage of that claim that you have to pay out of pocket. For more information on what builder's risk is, how to get the best pricing, and our tips and tricks to getting the most robust policy that you can, visit our latest Insight Builder's Risk, the Ultimate Guide at landisblosch.com.